Financial markets have continued to see yet more volatility through April, with worries about central bank rate hikes, inflation, Chinese COVID lockdowns, and worries over global growth. However, this has been offset by generally good earnings news. While investment markets seem less worried for now about the war in Ukraine, the risk of escalation remains, with Russia cutting Poland and Bulgaria off from its gas supply. This is part of a strategy to put more pressure on Western Europe. On the economic front, there are signs that inflationary pressures may be peaking in the US. However, the expectation is that the Fed and other central banks will continue to tighten in the short term. The Fed is expected at its May meeting to raise the Fed funds rate by 0.5%, and the Bank of England is also expected to follow suit and increase the key interest rate to 1% next month. Looking at growth assets, US March quarter earnings reports continue to surprise on the upside, with earnings on track to rise around 11% year on year, which is up from the initial expectation of a 4.3% increase. Energy, materials and industrials are seeing the strongest earnings growth. However, key to watch going forward is the impact of rising costs, and it's back to that inflationary story. Looking at sectors, technology lost ground over the month, reversing the rebound seen through March. Quality growth stocks have had a difficult start to 2022, seeing rotation into value and defensive assets. Then leading on from this, over the month the factors that performed the best were value and then small cap, with unsurprisingly growth performing the worst. Turning to defensive assets, conventional bonds remain under some short-term pressure given the inflation and interest rate expectations. So looking ahead, in the near term, financial markets are likely to remain volatile as they continue to grapple with the inflation and interest rate story. However, if we see further positive company results, this may act as a stabiliser in the coming weeks.